The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 12th. Fantastic Friday edition of today's, we'll call it the Lunchtime Report on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a terrific day. Let's make sure you and I do everything we can to have a wonderful weekend. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to throw at us. And that's really the role of life, is just to throw at us circumstances to see how we respond. Just like these markets, we're going to go check on those. I'm absolutely grateful for your presence here today. I'm here to serve you, so feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Fabulous Friday. Of course, none other than the Hotel California, sponsored by Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 146 points. She's trading at 17,893. S&P, that's off about 15 points at 2,094. Composite up 29 points at 5,053. Russell 2000 up 4 points at 1,264. The DAX over in Germany finished off 136 points. The FTSE was down 61. Gold is back 50 cents, no big deal. Silver back 10 cents. She's trading at 15.85. Light sweet crude is off 41 pennies right now, trading at 60.81. Lead the charge to the upside here. You got Ambarella, Chipotle, YY, Buffalo Wild Wings, Benefit, Focus, CyberArk Software to the downside. Agios Pharmaceuticals, Priceline, Regeneron, Receptos, Netflix, Granger, Worldwide, Asperion, Therapeutics. Those are all down $5 or more. We'll try to check in on those. Currency-wise, we got the euro. Japanese yen headed in the northerly direction. Not what the bears, not what the sellers want to see going on inside this market. So where do we begin? Let's begin with the chart that probably is the most important to both you and I out here to give us a feel for what's going on. We're going to take a look at the 300-minute chart here for the NASDAQ futures contract. As we take a look at it, if you're watching this on TigerTV, I hope that you are. If you look at the upper panel of my screen out here, what you see is a descending price channel. And here we've just simply connected 3 or more co-located opens or closes. That means we don't care whether it's an open or a close of a session. When you can identify 3 of those, and you're in good shape here. We've got 3 along the top. We've got 3 along the bottom of that descending price channel. The NASDAQ broke out of this, a 305-hour chart, broke out of that, as we both know, or we all know. It broke out of that on, 2 days ago? Nice wide-ranging bar. Now, when you break out of resistance areas, which is really what a descending price channel is, the most bullish thing that you can do is come back, test it, reject it, and continue your move higher out here. So we'll want to watch the NASDAQ. In the case of the Dow, in the case of the ES Mini, they're back inside their descending price channels out here. But it's the NASDAQ that really, it's the NASDAQ and the Russell 2000 that really need to be our primary area of focus, because those are the 2 indices, future contracts, that are really holding the market up or pulling the market up. And that's what you want to see. You know, when markets are moving lower, you want to see these 2 in first place moving to the downside. That is not the picture that we have out here. The picture instead that we've got, it's the Russell and the NASDAQ that are leading things to the upside, and they're the ones that are fighting off any of the selling that is going on. If we go take a look at that same 300-minute chart, but let's go switch over here to this little panel here. It's a little bit easier for me to use the Fibonacci retracement tool. So this is the Dow. Well, let's go back to the let's first go back to the NQ here. I don't have that descending price channel drawn in on this chart. I could draw it in, but I don't. But let's take a look at where we're at. If that descending price channel fails, which in essence is the low of today. The low, by the way, is 44.47. The interesting thing is, what I suggested to my clients this morning, this was at 7:30, was that the NASDAQ was likely to fall to a price level of 44.50. I originally had written in 44.44 to 44.50 out there, and I decided to get rid of the 44.44. The 44.50 area I thought was plenty. And where has price moved down to? 44.47. Okay, so if you think that that's useful information to you, you'd like to have that at 8 in the morning so that you could plan your day out there, you ought to come on over to the homepage at TFNN.com under newsletters, sign up for Mastering Probability. Check that out for the next 30 days out there because it gives you a great guideline as to what's going on inside of the markets. Now, as we take a look at where price has fallen to and where it's trading right now, it's below the 0.382 retracement, 44.65. If the low fails, this 44.47 area, we also see price pull back into the 44.36 area. Now, all price is really done at this stage of the game is pull back to the breakout area, right? If we're going to teach you how to buy breakouts and you just simply check your opinions at the door, because that's what you need to, one of the things that if you were taking one of my courses, what you would do is you would say, hey, Steve-O believes that the market, as Tom likes to say, talks, walks, and squawks, not necessarily just at swing points, but along the way as well as it makes those bars. In this case here, wide-ranging bar. Type 1, when you take a look at bullish bars, that's a breakout. You don't have to know anything about volume out here. You just need to be able to read the signs of the market. And price has now pulled back, in essence, to that breakout area, as well as to the top of that descending price channel. Don't know how things are going to work out here, but let's just go take a look at things. Here's strength, right? This is the NASDAQ, which I say is one of the strong dogs in the marketplace. Now, to prove that point, let's just take a look at the summation index as we speak right now. Even if the market's trading lower, take a look at where the price oscillator is hanging out, minus 1.37. That means there's probably about minus 500 net declining issues or so today. If there's, and all it needs in order to turn that price oscillator down below the zero line is minus 482. Like, you don't have to worry about whether it's net declining issues or not. You can just pay attention, obviously, to this show between 1 and 2 each day, or you can check out my newsletter service because that's included in each day, so you know what we're dealing with before you start your trading day. But at this stage here, even with this pullback, you've got the buyers. Now, what's that zero line? That is like the tug of war. Have you ever played tug of war? You know, on one side, and this came here when we take a look at the stock market, the tug of war is just between buyers and sellers. That's all that it is. You know, we like to give them names like bulls and bears out there. That's just buyers and sellers. At this stage here, the NASDAQ composite, through all of this turmoil here during the last week or so, really last several days, it hasn't really done much. With regard to sellers being able to do much, with regard to control of the market, you know, when it comes to the composite, nada, zilch, very little impact at all. What does that say? What's that really say to you? Is the NASDAQ leading things lower out here? Absolutely not. The market still wants to move to higher ground, moves to higher ground for the next several weeks out there. So that's what's going on when we take a look at the NASDAQ. We take a look at a piece of strength out there. Let's go take a look at a weaker area. And a weaker area is most certainly going to be the Dow. Now, the Dow had a big jet propulsion day, as you know, up, 250 points or so. And that's the trading day of June the 10th. Let's go take a look at where price has retraced. Now, first, we'll just stay here inside of the summation index, inside of the price oscillator. We can see that it squeaked its head yesterday just above the zero line. Obviously, it's given that up here. That tells you that inside the Dow, sellers really have been the ones that have been in control out here. The Dow needs some more conviction than it had a couple of days ago in order to move higher. But what has it done as we speak right now? That's as of, 1:15 on Friday. If we take a look at it, let's go back to the, where is it here? Oh, it's on this. You can switch these things around here. Let's go take a look at the Dow futures. Let's go look at the 5-hour chart, the 300-minute chart out here. And what we're going to see is just price. The reason why I'm using the 5-hour chart here, just simply easy to be able to express and show to you that what price has done is really it's made a 0.618 retracement. Now, that exact number, if you're just simply going to follow along exactness out here, it'd be 17,853. It missed. It missed by $1 whole out there. Got down to a price level of 17,854. As you and I discussed yesterday, oftentimes when price makes a 0.618 retracement, that's the place where the market can reverse, whether it's to the upside or to the downside out here. So you've got to be, so all that the weak link out here has done at this stage of the game, it's really come back into the area where it's broken out. Now its real breakout area is down further low. Remember in the NASDAQ, we took a look at its breakout area. It came really right back into that wide-ranging bar. Inside the Dow, the breakout area is really more along the lines of 17,796, 17,782, right around that point, 786 retracement. So it's all possible that price could move down to that level. If we go ahead and we delete the retracement, what you're also going to see, though, is on its 5-hour energy drink chart, the 5-hour chart, you're going to see a green horizontal line going across my screen. That green horizontal line going across my screen is called our TAS market profile support level. So price pulled back to a 0.618 retracement. It pulled back to a level of supply of support where buyers are basically hanging out. And that may be the end of the move to the downside today. That's what's going on inside of the Dow. Let's go take a look at the Russell 2000 TF. Let's go see what kind of retracement it's done on its 5-hour chart. Really? So this is a market that's getting ready to fall apart? Are you kidding me? What kind of retracement has it done off of its low out here? This is the trading session here of June the 9th. Look, this is not my opinion about what the market is doing. It's certainly my opinion of what it is that we're reading, but most of you have been around TFN for a long time. You know about these Fibonacci retracement numbers. You know about Japanese candlestick charting. You know about many of the tools that I share with you. Or if you don't, we're always here to be able to teach you how to do that. Just take a look at the retracement off of this low down here from June the 9th up to the high that was put in here yesterday, June 11th. The Russell 2000 has not even made, it's made a 0.382 retracement. The strongest, if that's all, that look, the Russell should move down a lot further. Now, I'm not trying to prompt it to go ahead and do that, but if it pulled back to 1252, you're 1264 right now, 12 points lower out there, there would be nothing wrong with doing that. So at this stage here, strong like bull when you take a look at the Russell 2000. That's looking at the 5-hour chart. Let's finish this off here. Let's go ahead and top the cake. Let's top it with some chocolate. Chocolate. Do you like chocolate? Maybe we'll put some chocolate chips into it. The S&P 5-hour chart looks very much like the NASDAQ. In that it has not made a 0.618 retracement. It's probably about a 50% retracement or so. It has come back to, one of its breakout areas, but the real breakout area inside the ES Mini is right around the 2084 level. And ideally, this is what you would see. I don't know whether you'd see it today. Maybe you see it Sunday evening. Ideally, that's what we actually see inside of the market. We see these levels hold, price stays somewhere right around these areas or maybe at the low of the day out there. And then Sunday evening, what we see is we see the ES Mini open up. Here's a 30-minute chart for the ES Mini. Because that 2084 would be an ultimate buy opportunity. Might be an ultimate buy opportunity. I've really got to take a look at the charts and see what's going on at that stage here. But if we take a look at the, we're going to have to wait to take a look until we get back from this break. We've got to go pay for the utilities and the lights and things of that sort. But we come back. You stick with us. We'll go take a look at that 30-minute chart for the S&P futures. We've got the Dow. She's off 138 points. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 137. S&P is down 13. Before we went into that break, we were taking a look at potential trade setups here for Sunday evening. Uncertain as to whether price will pull back to the 2,084 level. It would be a gift. It would be a potential gift. It's really have to see exactly how things are trading at that stage. But that's the line. I talked about the tug of war earlier when we took a look at the zero line for the price oscillator as well. There's a tug of war line at 2,084. Ideally, the market will move down. The ES Mini will move down through Sunday evening. Maybe it's early Monday morning. Get down to that 2,084 and give us one of those seventh wave stretch wave patterns to the downside and end right then and there. That just simply becomes a great trading entry spot. Becomes very easy to trade. So we'll see. Does that have to happen? No. It's just one of the patterns that I'm anticipating. That if it does happen, then I'm ready to load up and move to the long side inside the ES Mini and the futures contract out there. Now, question came in and said, how can I be so sure that the markets are moving higher? It's really not me that's sure. It's really what the markets are sure that they want to move higher. Why is that? Well, let's just go take a look at this again. This is just me trying to be as objective as I humanly possibly can with you by just showing you what I'm looking at and then asking the question, well, are you looking at the same thing? Let's take a look at 3 out of the 4 of our futures contracts. Let's go back to the Russell 2000. We already established inside the Russell 2000 that thing is strong like bull, hardly any retracement. Here's the daily chart, by the way, today. Price pulling back to what? Its TAS market profile high. That usually acts as resistance. Once resistance breaks, change in polarity, it should act as support. That's what's happened as we speak thus far. Russell 2000, even though we talk about it being in kind of the sideways trading range, the Russell 2000 index itself has got a price target of 1358. That's a measured move. That's a breakout of its consolidation. That's a price level that it wants to complete before there's any, perhaps, significant retracement inside the markets. The Russell 2000, as you can see, it's also in a rising price channel. That's the trend. The trend inside the Russell is to the upside. It's not Stevie's trend. It's the trend of the Russell 2000. Go take a look at the ES Mini out here. The ES Mini has been in a nice, now this is just shorter term. If we go back to 2009 to take a look at the trends on these things, forget about it. Then you have no choice but to see rising trend lines and price channels out here. Now, in the case of the S&P futures, it too is in a rising price channel. Now, if price is able to break through the bottom of this, which today that would be a close probably below 2,076, I would go ahead and take out that 2,084. Well, if the 2,084 level gets taken out and the bottom of this rising price channel here, Stevie will say, guess what? The message of the markets is totally different than the one that I'm giving to you right now. But that's not the information that's at hand with you and I. The information that we have at hand is that the Russell 2000 is up towards its highs. It's in a rising price channel. The S&P futures, the same. If we go take a look at the NASDAQ out here, if we take a look at the NASDAQ, what would be nice, in essence, it's really almost done that. It's come back and it's tested today. The bottom of that rising price channel, it might just be a tad lower than where it's at. Looks like there's that 44.44 number that Stevie was looking at earlier in the morning with regard to where price was likely to fall back to. Hey, even getting to 44.35.40, the bottom of its TAS market profile, which coincides with that rising price channel. It's just simply, this is the trend. This is the trend of the NASDAQ. Look, we know that each of these indices have got some resistance overhead. All we have to do is go to our longer term charts, take a look at our weekly charts. This is as an example is the weekly for the NASDAQ Composite. And we know that the NASDAQ Composite has been struggling to get above 5117, just as it had struggled to get above 5,007 out there. That was a monthly horizontal trading range boundary line out there. It got above that. Now it's just trading in between the 5,007 and 5117 area. There's nothing bearish about the NASDAQ Composite. When we take a look at its weekly chart out here, if we go take it back to the futures contract, back to the future, and we go take a look at the Dow. Now, the Dow is not really in a rising price channel. The Dow itself is just simply horizontal bound out here. And that's between 17,513 and 18,188 out here. So it's the weaker of the group. But that's about all that I can, that's really about all that I can say with regard to the Dow. In fact, if we go take a look at the Dow here, and I go back and take a look at the weekly charts, let's go do that. $INDU. If we take a look at that for the Dow Jones Industrial Average, we can see that this week price ran into resistance on its weekly chart, up at a weekly level of resistance. It's a horizontal trading range boundary line, 18,079 out there. Hey, the Dow could pull back to 17,454. Even that white line on my chart out here, that's a trend since 2011. Trend is still to the upside, folks. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 0.27 right now. S&P is down 12. I didn't pay attention to where it is we left off. Well, let's just take a look at some of the other important signals out here in the marketplace. The VIX index, of course, you know that Stevie believes that the single best use for the VIX index is where the VIX is traveling in relationship to its 50-day exponential moving average. Now, the 50-day, that's the top portion of my screen out here. The top portion of my, what I like to do is, whether it's inside my newsletter, the radio show, it's all about really being able to provide you with actionable, logical tools that you can use because, let's face it, trading and investing, it's 100% in between your ears. It's all emotional. Now, emotional is good. But what I do like to do is to provide you with a set of tools that help you to identify the emotion of the markets. Now, the 50-day exponential moving average, which really perhaps one of the coolest tools out here when you understand how it impacts the general stock market price, the S&P 500 specifically. If we take a look at the 50-day exponential moving average, right now it's 1382. You got the VIX priced out at 1357. What happens inside the market is irrelevant, totally irrelevant as to what the price point of the VIX is, because there's a lot of folks that will say that a low VIX means that there's, complacency, there's no fear. But I don't know how you trade that. I can tell you this. The way that you can trade it, regardless of what the number is where is the VIX index, is above or below the 50-day exponential moving average. When the VIX gets above the 50-day exponential moving average, that's when some real carnage can take place. And it's irrespective of the actual number. The easiest way for me to point that out to you is really just the proof is in the pudding out here to tell you that I ain't full of you-know-what. Here is an example of the VIX reading back in November of 2011, November 28, 2011. The actual reading on the VIX is somewhere around the 33 level. Now, if you were a person that really bought into the theory that, a low VIX means the market is complacent and therefore there's no fear, you would have to assume that a VIX that's trading 3 times that, there would be nothing but fear. And so wouldn't that equate to, well, shoot, you better sell the market? You better not be in the market? Don't buy into a lot of that stuff where people don't really go back and truly do the homework. I ask you to go do the homework out there. Or let me do the homework for you. I just lay out the charts. That's what you get inside the newsletter service. Well, as an example, by the way, that day, the day here of November 28, 2011, the VIX moved back below the 50-day exponential moving average. That was after making a nice bottom November 28, 2011. Look at how the VIX is up at these high price levels here. At these high price levels in the 30s, in fact, it moved all the way down into the 13 level. But take a look at what the market did, the S&P 500 underneath it. So don't get caught up into the stuff that they talk about on television out here about the VIX and no fear, and because you want to be able to have actionable trading tools that you can use. So go study that pattern. You'll see that when the VIX, it doesn't matter what the number is at, when it trades above or below that 50-day exponential moving average, it tells you a ton about the markets. Right now, all that the market is doing today, it's testing that level of resistance. Now, if it gets above it, if we see a VIX close above that, that could happen. If it closes above the 50-day, then that says, okay, we got to come back and reassess. But what's really important for you and I to do is to read the message of the markets with the information that we have right here, right now. What you and I can't do is really project exactly what's going to, what we can't guarantee, I suppose is the word. We can't guarantee what's going to take place. We can project what's going to take place, but we certainly can't guarantee it. Now, so the VIX is below that. We've got currency pairs, which Stevie believes rule the marketplace out here, and that's why you and I, we refer back to the currency pair that provides us with more information than any other currency pair with regard to the general stock market, and that's the euro, Japanese yen. It is the carry trade out here, and if you're trading the markets and you're not paying attention to what's going on inside the euro, Japanese yen, you're just leaving a simply extraordinarily valuable tool that could be right in front of you, off of your set of tools in order to make trading decisions. We can see that the euro, and what happens here is that the market and the euro Japanese yen at times get off kilter. It means we have a divergence. Price inside the euro Japanese yen is moving higher, the markets are moving lower. What does that mean? That means that the markets, if you go back and you study this currency pair for years and years, if you go back and you study it, what you find is it is a indication that the markets are going to get back on path with the direction of this currency pair. This currency pair has basically been on fire out here. While our markets have been making lower highs, meaning the ES meaning the NASDAQ, those are the bottom and center panels of my chart out here, we got the euro Japanese yen just simply moving up towards space out here, moving higher. The markets are giving us another signal that they're going to be moving higher throughout the summer months out there. So I just lay out the information. You've heard, if you've listened to the morning shows that I used to do from 9 to 11, you've heard a lot of this information over a period of time. And so we just simply go from there. Let's go out to our man John in Sarasota today. John, how you doing this afternoon?
Very good, Steve. How about yourself?
I am doing excellent. Thanks so much for asking. Are you trading the euro US dollar?
No, just the euro.
Just yeah, okay. So you're trading the euro, and tell me what you're doing, how I can help you.
Well, I was thinking about going long on the, I was going to short the euro.
Okay.
But I think I better go long on the EUO.
EUO. Okay, so the EUO is the ETF for that. So let's we'll take a look at first. We'll go take a look at the EUO. Let me pull that up on my screen out here, since that would be the ETF, EUO. And the first thing we want to just take a look at, John, when it pops up on the screen, is where the market profiles are. It's kind of interesting because when we take a look at this, this is the ultra short for the euro here. And when I take a look at, no, this makes sense. Okay. You're going to go ahead and you're going to take this to the long side?
Just buy it the way it is.
Yep, you're going to buy it just the way it is. Now, ideally, if we were to use just simply these market profiles, if we weren't going to take a look at the currency pair, what this would tell me, John, is you really want to see this ETF close above $24.63. If it closes above $24.63, then you're likely to see a price run to $25.37. It may go higher than that, but that's going to be the first area of resistance that it would run into. But as we speak right now, its message is maybe not so fast, unless there was some other pattern that we saw here inside this ETF. And I don't like an A to B equals CD pattern, you know, some other pattern, a Gartley buy, Gartley sell, whatever it might be. I don't see any other pattern as I take a price relative strength divergent pattern. I don't see any of that just yet. So the safer trade setup when we take a look at EUO is actually to buy it at a higher price, make it prove itself, and get above resistance. Now, what's interesting about that 24.63 line, that's that little green line going across the bottom of my screen out here, is that price has been below that level since June 3rd. And it came back up and tried to test that on June 8th, and that acted as resistance. Although it hasn't really tested that level yesterday and today, you know, it's still, as best as we can tell, is a resistance barrier. That's what this is saying. If you did take the long trade, what you would want to do is you'd probably want to have a stop below your May 15th low out there, which is $23.55. So that's what the EUO says to both you and I on a daily chart. But let's take a look at it on a weekly chart just for the heck of it. Let's go see if the weekly profiles provide you and I with any different message. And the weekly profiles do. So this is interesting. So the weekly profile, John, suggests that 23.98, and the weekly profile, whether a weekly chart is going to have more meaning than a daily. So the weekly chart here says that 23.98 is a very important level of support. So if you took the trade now, you'd want to have a stop below that level that we talked about. I think that was 23.55. But if you see it close below 23.98, there's a pretty good chance that you're on the wrong side of the trade. So that's utilizing the weekly numbers as well. Now, does that information assist you with with this trade? And okay, good.
Yeah, and thanks for the tip on the IBM, because it didn't close above those numbers you gave me the other day.
Oh, good. Yeah, it's you know, the thing with and I was going to mention to you as well. So in the case of IBM, what's good for you, I'm going to put that weekly back up on my screen. You know, what you want to see, being on the short side of IBM, the weekly says you want to see this continue to close below 167.35 out there. And as long as it does that, you know, then it's trading inside the breakout from the week that began April 20th, and it could pull back to the 161 level out there, and that's really the message of the weekly chart. And just like we look at those profiles on the weekly and the daily, in the daily, this says that 166.65 may in fact be support, and that's what we've seen here today. It got down to an actual price point of 166.71, so that's pretty close to the 166.65 area. You really want to see that level broken, being on the short. You're on the short side of IBM, right?
Correct.
Yeah. So, you know, ideally, you'd like, and volume so far today is pretty low, 1.6 million shares versus 4.6 million shares. So it looks like it's running out of some energy at this stage here. But use that weekly number as your real gauge inside of IBM, and I think you'll be okay.
Good. Thank you very much. Appreciate all the help.
My pleasure. That was John in Sarasota. That was taking a look at the ETF structure for the euro versus the U.S. dollar. Now, if we take a look at, oops, that's the euro-Japanese yen. If we take a look at the actual currency pair, for those of you that trade the currencies out here, you know, and I don't know that the euro is going to do a lot from getting traction to the upside or the downside until we really, is Greece going to be a huge impact on the direction of the euro? And at this stage here, I'm going to lean towards yes. I think there's a market reaction, but then that's probably an overreaction. Currency pair, maybe not so much out here. In the case of the euro versus the U.S. dollar, it's trading above its market profile. That's the daily chart, by the way. It's trading above its market profile, which is 112.25. So it's just the opposite, because we're looking at the short ETF with John, and we mentioned, hey, maybe it's best to buy this at a higher price on the daily chart. The weekly chart, a whole different thing out here, but I'm just sticking with the daily. And so the daily, with regard to EUO versus what the currency pair shows, really the same message out here. Because in the case of the euro U.S. dollar, you'd want to maybe consider a short below 112.25. Now, the way that this market profile is set up, it's actually a bearish profile, which when you close above a bearish profile out here, that says you got to really think about being short. And the reason why I say that it's a bearish profile, just simply because this point of control area, this light blue cyanic type of line, I don't know if that's not cyan, that's just light blue, is it not? In any event, that is closer to resistance. And that says that really the sellers should have been lined up inside this area, and they should have been able to defend price. But let's put the weekly chart up on my screen just to see what those numbers are. I'm assuming that this is going to be below, and it is, below the resistance. So here's where we've got a weekly versus a daily number. You'd like to see everything congruent or, in alignment with each other. We just simply don't have that going on inside of this currency pair. But nonetheless, those are the parameters that you would want to consider. If we let's go take a look at some gold stocks out here. Now, one of the things that we pointed out yesterday to each of you was there was trouble. Let me get the daily chart out here. Trouble in both the XAU land and the HUI. And that was because we looked at this hammer candle from June 8th, the low of which was $67. You're trading at $66.60 right now. Another test. Yesterday was a test and a rejection, meaning that prices got down to $66.95 but closed at $67.13. Testing the low of a hammer candle and rejecting it and closing higher, that's okay. That's not bearish. Closing below a hammer candle, that's a problem. I don't know where the XAU is going to close at the end of the day. If you are long miners, if you're along the mining ETF, the GDX, the Nugget, whatever other miscellaneous ETFs there might be out there, you really want to see a close back above 67 inside of the XAU. Because if you don't, closing below a hammer is never a good thing. And in this case here, I think more likely than not, the message is that you want to, this wants to trade down to about 61.79 or back into the swing point from March 11th out there. That's his best. Now, there's a couple of stops along the way, maybe to, go to the restroom. Get some water. But the problem is, and try to put water on the fire out here. The problem also that the the XAU has, is you're now trading inside the swing point from March 31st. The high is 66.79. You're at 66.59. That says you go test the bottom of that no matter what, and that price point is 65.10. Now, I won't say no matter what. No matter what is when you close below $67. Then I say you are more likely than not to go test that bottom, and then perhaps even go all the way back down into that March 11th low. That's what's going on inside of the XAU. Inside of the HUI, it's really the same message out here. It had a hammer candle. It closed below that yesterday, I believe. That was from June 8th. That low was 157.79, and yesterday's close was 157.18. Yeah, so you already closed below that. That's not a good scene out here. However, if it's going to have support, meaning the HUI, it's going to be at 154.46. So it's down a couple more bucks, about $1.80 or so from where you're at right now. But that's where it's headed to. We'll get back from this break. Let's take a look at a couple of gold stocks, just see how they're holding up. We'll go take a look at Rand Gold Resources, GOLD, see what it's doing. Hey, not too shabby. It's trading above its market profile low of 69.80. This is Steve Rhodes with TFNN. We'll be right back, folks.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks, to this fabulous Friday here at TFNN. Hope you're having a great day and that you've got a great weekend planned. Dow's off 138 right now. S&P is down 14 points. When we went into that break, we were talking about gold stocks. I mentioned Rand Gold. I'll go ahead and pull it up on the screen out here, just to kind of get a feel for what's going on with some of these equities. And we take a look at Rand Gold right now, trading out at 71.28. Not too shabby out here. If it breaks below 69.80, I expect a test of the March 11th swing point between 66.45 and 69. 50 out here. So this doesn't look to be too bad, too damaged. If we take a look at Barrick Gold, a little different story out here. Now, Barrick Gold was one of the stronger stocks recently off of the lows out here in the middle of March. Nice sign of strength off of the bottom on the trading day of March 18th, and then a follow-up on April Fool's Day, April 1st. Big moves higher. Now, price is pulling back into that breakout. So that's a nice little sign out there. The April 1st low is 1106. 1102 is a 0.786 retracement off of the low out here from March 17th. I'm going to go ahead and get rid of the retracement out here. And if we take a look at the swing point, let me see, where's the actual low? 1030, 1029, 1030, 1031. It's 1029. It's this day here from March 17th. If, in fact, that level fails, meaning, somewhere right around a little bit below where it's trading right now, let's just say if the area of 1090 fails, you should see 1060 inside this. And then actually that's where you would really get a nice piece of information. Maybe it's going to pull back and make 100% move to with lighter volume and then just simply be in this consolidation area. But that's on a Barrick Gold. We'll take a look at one more. Let's go take a look at Gold Corp. GG is the ticker symbol out here. Now, Gold Corp has got some problems. For sure. One of those problems is it cannot clear the supply line that was created on the downdraft day from March the 6th with 13 million shares. Gold Corp now is trading. Where is it trading? Nasty territory, I believe. Let me put a line on the chart out here. Yeah, it is. This is their Gold Corp's got something going on because it's trading below the October 31st, 2014 level at 20,559. Now, Gold Corp's one of the top 5 holdings, I believe, inside the XAU. And that's why we're seeing the XAU struggle and close below its hammer candle out there. Now, that swing point at 20 million shares, you're trading below it with light volume. But, if you continue trading below it, let me put a weekly up on my screen here real quickly, see what else we might find. Eeks. We don't find a lot. It's dangerous. Volume or not, it says that Gold Corp could actually go ahead and make a run for the October 2008 low at $13.84. Be careful inside of Gold Corp. GG is the ticker symbol. So what is it that you're going to focus on come Sunday evening? If you're trading the futures, you're going to be looking for, see if we get one nice little push down. Yeah, and I don't know that it'll happen. It would just simply be a gift. It would be a potential gift out here. It'd be the type of gift I'd want to unwrap, and that's with the ES mini moving down about another 10 points, about the 2084 level. And then we ought to see a big rubber band stretch, and then begin the march higher inside of the market. So that's what we want to be paying attention to, amongst other things. Of course, if you'd really like to get a jump start on your day, come on over to the homepage at TFNN.com, and under Trading Newsletters, go ahead and click on the link for Mastering Probability. You can check that out for the next 30 days. Folks, stay tuned because the lovable, I do mean lovable, squeezable soft, I can't vouch for that, but I'm going to go with it because that's what he says. David White is up next. So it's been great to be with you. Have a great weekend, a great Friday evening. Be safe out there, and we'll see you Monday. Take care, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching TigerTV.